Hello guys, how are you all? So let us begin our new video today on financial markets. This is going to be on NBFC topic only. Okay, so we have already studied what is the difference between NBFC and a bank, what is the meaning of NBFC. Okay, we have learned the basics of NBFC, who regulates them, what are the different categorization of NBFCs depending on their activities. So in this particular video today we are going to continue the same. So but in detail we will study today. Today we are going to see different NBFCs based on their activity, okay, based on their business. What different businesses they do, what different activities they do, we are going to see them in detail. Okay, so let us begin. The first NBFC that I want to discuss with you is the asset finance company. Okay, asset finance company. See, again you have to break the terminology and try to understand the meaning. Asset finance company meaning it is a company which will finance, which will give loans for creation of assets. Okay, for creation of assets. नाम से ही आपको थोड़ा आइडिया आना चाहिए. So the principal business, the primary business of AFC, asset finance company, is financing of physical assets supporting productive or economic activity. So they are going to finance or they are going to support such assets which will lead to creation of some productive activity, okay, economic activity. For example, automobiles, tractors, machinery in the factory. So for example, if there is an industry and in that industry they want to install some machinery, okay, so this machinery is a physical asset, and now with the help of this physical asset, with the help of this capital, they are going to do some productive activity, they are going to do some manufacturing, they are going to do some economic activity. So such financing will be done by asset finance company because they are financing some physical asset. Similarly for farmers, okay, for farmers they want to purchase tractor. Okay, this tractor will be used to do farming activity. So again this is doing some kind of economic activity, so it will be done by asset finance company. But try to remember this, they only finance physical assets which support economic or financial activities. Okay, productive activities, not financial activity, sorry, only economic and productive activity. Okay, now what is the example of asset finance company? It is a ICICI AMC, okay, UTI AMC. So AMC or AFC, AMC is asset management company basically. Okay, AMC is asset management company, also asset finance company. So AMC, AFC are the same thing. ICICI AMC, UTI AMC, Birla Sun Life AMC, these are a few example of asset finance companies. There are many hundreds of AFC in India, so I have just mentioned 2-3 names here. Okay, I hope you have understood this. Fine. Now let us come to the next type of NBFC, which is the investment company. Okay, investment company. Now again from the name they are doing some kind of investment. Now what investment they will do? They will do investment in securities, in financial products. Okay, securities meaning shares, stocks, bonds, etc. Okay, so this company will invest in securities or financial products. Now how they will do? These are the common people, they will take money from the common people, investment company, and then they will invest in stocks or bonds, any type of financial product. So this is their main business. Okay, they will earn some return from here, they will return some of it to the people and keep their profits. Example of this is Muthoot Finance, L&T Finance, HDFC Mutual Fund, Bajaj Allianz General Insurance Company. So these are the different companies which invest into different types of financial products. So the financial product can be mutual fund, it can be stock, it can be insurance, anything. So they take money from the public and invest. So they have access to public fund. They have access to public funds. Okay, this is important. Now let us come to the next one. Next company is loan company. Okay, loan company. Again the name suggests it will give loans. Now see, in asset finance company also it was giving loans to purchase some physical assets. Now what is the difference between that? Loan company will offer loans for various purposes other than that of AFC. So asset finance company will finance physical assets for productive activities, whereas loan company will give loan for other purposes. Okay, so there are other purposes also. Other purpose meaning you want to take loan for some personal reason, like you want to take loan for marriage, or you want to take loan for building of house, etc. Okay, you want to purchase a car, so car for personal consumption. So these are the loan for other purposes. So it also includes the housing finance companies, okay, which finance the houses. Example is LIC finance, PNB housing finance company. So this is the simple meaning of loan company. Now all these companies are regulated by RBI. Please keep this in mind. Whatever we are discussing today, they all are regulated by RBI except for microfinance institution that I'll tell you. Okay. Now the next type of NBFC that we are going to see is infrastructure finance company. See, again, the name itself says it will finance the infrastructure projects. Okay, so 3/4 of their loan portfolio should be with the infrastructure projects. Infrastructure projects meaning construction of airports or ports, okay, or bridges, any kind of infrastructure, physical infrastructure. So the companies which finance infrastructure project are known as infrastructure finance companies, and they can give loans for other purpose also, but 3/4 of their portfolio, loan portfolio, should be with the infrastructure project. That is a requirement. Example of this is GMR Infra. See, you friends, you must have heard this name GMR on Hyderabad Airport and Delhi Airport. So Delhi and Hyderabad Airport are built and constructed by GMR Infra. Okay, they have financed these projects. Hindustan Construction Company, HCC, again a very famous company. So these are huge companies, and infrastructure finance companies are very, very big companies because their minimum entry capital is 300 crore. See, there is an exception. For NBFC, for any other NBFC, the minimum entry capital is 2 crore. For microfinance institution, it is 5 crore. But if you want to have an infrastructure finance company, the minimum entry capital is 300 crore. This is an exception. Therefore, see, 300 crore is a huge amount. Okay, not anybody can invest such a big amount. And therefore, these companies are very large companies and they do very big projects. Oh, okay. So keep this in mind. Now let us come to the next kind of NBFC. It is a systemically important core investment company. Okay, see, systemically important, this terminology you already understand. I've explained to you many times before. Core investment company. See, again, they are investment companies, but they are into core investment. Core investment meaning long-term investment. Okay, long-term investments. Okay, the core investment. So just try to remember this. Now, 90% of their investment is in shares, stocks, debt, or loan group company. Okay, they are investing into different kind of financial products, just like the investment company. They are investing into financial products only. 90% of their investment should be into this. They can accept public funds. Okay, there are two types of systemically important. So one is which accept public funds. Okay, and which do not accept public funds, which cannot accept public funds. Okay. Now, systemically important core investment companies are two types. Public, they access public funds, and they do not access public funds. So the companies which do not access public funds are not regulated by RBI. Okay, RBI doesn't regulate this. But companies which are accessing public funds are regulated by RBI. Okay, so their asset size can be less than 100 crore. So any company whose asset size is less than 100 crore, they are regulated by RBI. And if the asset size is more than or equal to 100 crore and they are having access to public fund, then they are regulated by RBI. This is important, very, very important. They can accept public fund. They are same as investment company, but they invest in long-term securities. Okay, that's why they are known as core investment. They are known as core investments. And they cannot invest in insurance sector. This is very important. They can invest in any type of financial product, but they cannot invest in insurance sector. Example of a core investment company is Tata Capital in our country. In India, example is Tata Capital. Now let us come to the next kind of NBFC. It is infrastructure debt funds. See, again the name, it will invest infrastructure products. Okay, infrastructure projects. It is debt funds. Debt funds meaning it will get money by issuing of debt products. Issue of debt instruments. or debt products, or debt is same as bonds. Okay, debt is same as bonds. I have already explained to you the meaning of debt investment and equity investment. इन दोनों में क्या डिफरेंस है, आई ऑलरेडी एक्सप्लेन टू यू. सो दे आर गोइंग टू रिसीव द मनी बाय इशूइंग ऑफ डेट बॉन्ड्स, ओके, डेट instruments, and they will finance the infrastructure projects. So नाम से ही हमको पता चलता है, the name itself suggests that they raise resources through issue of bonds or debt instruments. Okay, they fund long-term infrastructure projects. Okay, see, usually the debt or bond instruments are long-term instruments, long-term savings. Okay, they are usually the long-term savings, and they since the the source of financing of this company is bonds, is debt, therefore whatever they will loan also, they should also be long-term projects only, so that there is no asset liability mismatch. Okay, this concept I will explain to you later on. Asset liability mismatch. Asset meaning whatever loans they have given. Okay, liability meaning whatever loans they have taken, whatever resources they have collected from, mobilized from. Okay, so there should not be a mismatch. If liability are short term, okay, and assets are long term, so if they have funded the long term projects like infrastructure projects, which is long term, they are going to pay them back in 30 years, 50 years, 100 years, like that. But if their liabilities are short term, then in that case there will be asset liability mismatch, and there can be a problem. So usually they issue bonds which are long term. They also fund the long term infrastructure projects. An example of such a company, infrastructure debt fund, is Infradebt in India. Infradebt. It is a joint venture of ICICI Bank, Bank of Baroda, Citibank, and LIC, etc. There are other people also. So it is a joint venture of all these financial companies, all these banks. Okay, now let us come to the next one. Next one is microfinance company, also known as microfinance institution, MFI. They are not licensed by RBI, but they have some regulation of RBI also, and they are regulated, they are licensed by Ministry of Corporate Affairs, by Department of Company Affairs. Okay, MOCA. So they are basically regulated by this, licensed by this, but RBI also has an overall regulation on microfinance company. This you have to keep in mind. Now microfinance, see, the name itself says it will give small loans, micro loans, small loans to poor, women, okay, farmers, rural areas, etc. So they finance the poor and underbanked people. Okay, example is Bandhan Financial Services Limited, Ujjivan Financial Services, etc. So these are the microfinance companies. The minimum entry capital is 5 crore rupees. This is important. Now let us come to the next type of NBFC, which is known as a factoring company. So basically the business that they do is invoice factoring. Okay, now what is the meaning of factoring? See, it acts as an intermediary which buys a business's receivables, agrees to pay value of invoices less a discount for commission or fee. Okay, now I will explain to you the meaning of this. For example, if there is a business, okay, there is a businessman. Okay, he has sold, he has some business, he has sold his products in the market, or to other companies, maybe to other businesses. So what, he has sold his products to say another company, and he has sold product worth rupees, say 1 crore rupees. Okay, now this person is going to pay him back this 1 crore rupees after 3 months. Okay, so this 1 crore automatically becomes his receivables, account receivables, because he is going to receive this amount 1 crore rupees. It goes into his account receivables. Now what happens, this person, this original person, he is in urgent need of money. He needs the cash now. Okay, but because of his business rules or because of his relationship with this person, he is not able to ask money from them. Now he wants urgent cash, he wants this. So this is where the factoring company will come in. Okay, so there is this factoring company, okay, that will come in. What this factoring company will do, factoring company will tell him, okay, I will pay you this 1 crore rupees. Okay, you give me your account receipt, like whatever you are going to get from this person, okay, after 3 months. So you give me your receivables. Okay, I will buy your receivables and I will charge you some fee also. Okay, some fee or some commission. So this is how this factoring company will do the business. So it is a kind of intermediary. It will buy this business receivable. It agrees to pay the value of invoices. Okay, that okay, this is 1 crore rupees. I will pay you the value of that invoice. Obviously with a discount, not entire 100% he will pay 1 crore rupees. He will pay say 5% less or 2% less, 1% less as part of his fee. Okay, and he will take some fee and commission also, and in advance he does not pay 100%, he will pay 80 to 95% of value. Okay, so he says that okay, you urgently need money, I will give you 80 lakhs today, 80%. Okay, and after some time I will pay you another 20 lakhs. So this is a factoring company, this is the factoring business. Why it is done? It is done to boost the cash flow. So basically this person needed cash, so he did this. Now example is Altline. It is not an Indian company, but it has its business in India also. Altline factoring company. Then India factoring. This is another example. Now let us come to the next kind of NBFC, which is the mortgage guarantee company. Okay, see, mortgage guarantee company, again the name itself is mortgage, which is a kind of collateral, which is a kind of guarantee, which is a kind of security for any loan. Guarantee meaning it will guarantee that this mortgage will pay you back, and so that is how it is. So entry capital, again here it is 100 crore. This is important. For mortgage guarantee company, the minimum entry capital is 100 crore. Till now we have seen 3 exceptions, right? For infrastructure finance company, we had seen that it is 300 crore rupees. This one, right, this was 300 crore rupees. Then for microfinance institution, we have seen that it is 5 crore rupees, and for mortgage guarantee company it is 100 crore rupees. So these are the 3 exceptions. Now what they do is they are into the business of credit default guarantee. Now what is the meaning of credit default guarantee? We will see. And the credit default guarantee, they usually do it for house ownership, for housing loans. Now see, I will explain to you with this simple diagram here how it happens. See, there is a creditor. Say there is this one person who has taken loan from the bank. Okay, this is a bank. He has taken loan for his house. Okay. The creditor is the bank. Okay, creditor is a bank, and there is this person. Okay, there is this person who has taken loan. Now bank has given him the loan. Now what is a mortgage? Mortgage means basically the security. So in housing loan, the house itself is the mortgage. Okay, house itself is a mortgage. Now what will happen? This bank, so it is not 100% sure whether this person will be able to pay back the loan amount that is given to him. So now what will happen? There is a role of this MGC, mortgage guarantee company. Mortgage guarantee company, what they do is they will guarantee these banks, they will guarantee this creditor that the repayment of the repayment will be done by this person whenever the time comes for the housing loan. Okay, they will guarantee, and in turn they will definitely charge the fee because they are bearing the risk of default. If this person defaults in repayment, then the mortgage guarantee company has to pay the bank the loan amount. Okay, so it is actually the guaranteed amount. It is not always the 100% of loan amount. It is a little bit less. It can be say 90%, 95%, whatever is there in their terms of conditions. Okay, terms and conditions, whatever is there. So they will guarantee that amount, that okay, if your loan is say of 50 lakhs, we will guarantee that we will pay you 40 lakhs, like that, something like that. Okay, so the guarantee amount they take, so they bear the risk. Now for that risk they will charge the fee, they will charge the premium. This fee in turn, definitely the bank will recover from the person only, from the debtor only. So this fee gets recovered from the borrower. This is a kind of insurance. It is a kind of loan insurance for the bank. They are insuring their loan. They are kind of taking a guarantee for the credit default. Okay, credit default means what? If failure to pay back. If this debtor, if he fails to pay back his loan amount, so they need some guarantee. So that is known as credit default guarantee. Okay. It is also known as credit default swap. So credit default swap meaning they are now swapping the credit default risk from one company to the another. Now what happens? Now this mortgage guarantee company, in case this person fails to pay back the amount, mortgage guarantee company will be able to realize the value of property by acquiring it. So mortgage guarantee company has the power to acquire the property or whatever this person has in order to pay back the amount to the creditor, and all those whatever the problems will arise, whatever the issues will arise, this MGC will take care of that. So basically this creditor will not be able, the creditor does not have that tension in the future that they will have to go to all the court and different acts and SARFAESI and different things. This MGC will do that for him. Okay, so he is basically getting the credit default guarantee. Okay, so this is how the credit default mortgage guarantee company works. Now in India there is a one company, India MGC, it is called India Mortgage Guarantee Company, and it is a joint venture of so many different other banks or companies. So it is a joint venture of NHB, National Housing Board, then Genworth Financial of United States, Asian Development Bank, International Finance Corporation. So it is a joint venture of all these different people. Okay. Now let us come to this non-operative financial holding company. Again, see, I have explained to you. I had also asked you in one of the previous videos as to tell me in the comment section what is the meaning of NOFHC. See, again, the name itself suggests non-operative means it is not operating in the banking company. In the itself, it is not a bank. It is a financial holding company. Okay, it holds some bank, it holds some financial company. So they hold a bank or they set up a new bank. Okay, so they are the kind of promoters of a new bank. Example is IDFC is held by an NOFC, IDFC Finance Holding Company. Okay, this company has to keep its principal business separate from their other businesses. Okay, the NOFHC has to be separated from their other businesses. There has to be no mix up. So there has to be a Lakshman Rekha. I have already explained to you in the previous video. They can engage in other financial activities after 3 years of formation. So after they are formed, they can engage into other financial activities. Okay, but only after 3 years. So basically their main business is that they hold a bank, or they are kind of promoters of a new bank. So this is about all the different kinds of NBFCs that we have discussed today in this video. This is a very little bit difficult to keep in mind, but you have to watch it like again and again. You have to make your own notes and try to remember, try to use this trick that you have to understand things from the name themselves. Okay, so whatever are the names, उससे आपको थोड़ा समझने की कोशिश करनी है कि ये क्या है. So in the next video also we will continue. Thank you.